In this video, we are going to answer the question of whether the Japanese economy is truly leading the financial markets to disaster, or if we are facing a perfect feud campaign. In other words, are we looking at a fantastic buying opportunity for the long-term crypto market? At this point, I think everyone knows two things in life. First, that I went on vacation and now I'm back. And second, that the Nikkei Japan's index experienced a black swan event that managed to drag down the S&P 500, the Nasdaq, and the crypto ecosystem. As my colleague explained in previous videos, the reason or trigger for this significant drop in the Japanese Nikkei index was prompted by its central bank raising interest rates for the second time in Japan. This is a truly unique and exceptional event since Japan has been following a monetary policy that is, let's say, contrary to the rest of the world, a policy of very low or zero interest rates perpetually. If one day the central bank decides to say, hey, we no longer like this invention, let's start raising rates, this event is clearly going to induce fear in the markets. I think it's something natural, and you'll agree with me here. Can anyone here say or assert that this event undoubtedly implies a crash in Japan's economy? Frankly, making such a statement seems very imprudent. Let's remember how in the past, when it seemed that the American index, the S&P 500, was falling due to the war between Russia and Ukraine. It was used as a catalyst through a FUD campaign, and the rest is history. The same was repeated later with a trap from negative CPI data in the American index, and we see the result. With this, I want to say that we should not act sentimentally and passionately in the face of news that objectively might be negative. But as you can see in very recent examples that I can recall from memory, when it seemed that everything was going to hell with the S&P 500, here you see what happened afterward. So, let's start evaluating the price structure provided by the Nikkei index. Here, you can see a defense zone that I think catches the attention of any human being on Earth, and it's no coincidence that the price has been able to react the way it did after such a fall. Let's get straight to the point. While this defense zone is not breached, my friend, we do not have any kind of crash in the Nikkei. Of course, there is a black swan regarding this distribution process, also promoted by a trap reaching an all-time high, no doubt about it. But hey, interest rates go up, the price falls dramatically with a lot of volume, and it rebounds as if this were a front on court, conveniently over a structure we consider key. We will cross this here, of course, to analyze the traditional market. Take a look at the S&P 500 on the daily chart and observe this drop that we're seeing, which has certainly frightened many people. Notice, if we talk about price structure, that nothing has really happened here. Just ask yourself if your surroundings and your friends are currently afraid of the financial markets. If your answer is yes and you see this chart, I think you'll find the answer without us needing to share it with you. In the end, we have this key defense zone in the S&P 500. Notice if there's room to go down here and nothing significant would happen. Now let's take a look at the Nasdaq before we move on to Bitcoin. Look at the Nasdaq, the index of American tech stocks, and how it dropped precipitously against its defense zone. Unlike Bitcoin, the Nasdaq has indeed reached its defense zone. But if you ask if this has been lost, the answer, I believe, is obvious. Historically, seeing scary drops in financial markets due to various catalysts is normal. It's something routine. We never know the length of the drop, but as you can see, these things happen. Now, I'm pointing everything downward, but I think you'll agree with me that the trend is clearly upward. What I'm getting at is the SUX defense zone has not been breached, so there's no need to be negative here. Soon, I'll tell you where the next opportunities are, which I see quite clearly because yes, I believe very good long-term opportunities are coming very, very soon. But I'm sure you first want to see our updated analysis of Bitcoin. And now I'll share it with you. But first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Take a look at the Bitcoin chart on its daily time frame. We need to remember some concepts. We're working within a macro bullish channel. On the other hand, here we have a strong bearish impulse, which we've been working on its W, its weak Y, and now we're in a Z. I think you already know this if you've seen previous Crypto Insight videos. That said, let's zoom in a bit on the current moment. If this is a Z, which there is no doubt it is, we have had its structure here. Now, the million-dollar question, which I'm sure the entire Crypto Insight community community has been asking this past week is whether Bitcoin's macro Z has been breached and collapsed, leading us into a bearish market. What I can guarantee is that in this video, we are going to try to answer such a tricky question and be very clear with the response. Look, here's the click of the Z. It's that structure that we value so much. And if you remember around the 4th, 5th, 6th of July, basically, around these dates that I'm highlighting here, we were considering it an ideal, optimal point to look for a long-term buy-in, as we were at a point where it was difficult for it to keep going down, and we could look for that buy. It has made a very, very interesting move, and now notice exactly how we said this was a very good buying opportunity. Exactly. We are at a market extreme. So remember, we are not talking about what we always do, which is intraday trading, futures trading, or what's going to happen today or tomorrow. Today, we are not talking about that. Today, we are looking at a daily chart. What we are seeing is that the next drops that may come, if you ask me, you know what Huge and I are obsessed with. It's finding traps. If we see a similar event, these traps, we are obliged, as they say. Each person is free to make their own choices, and this is not an investment recommendation. We are simply sharing what we think. As Crypto Insight, we are obliged here to look for buys at this trap on a macro level, basically because we might then find ourselves at that market extreme, that recovery, and hey, the Z simply continues. Okay, why am I showing you this? First, because this is a potential trap over the click of a Z. I know these concepts might seem new to many, but don't worry. With time and watching the videos, you'll understand us better and better. The point is, if this was a key point to look for a long idea, which was the concept of a structural trap, now we have to ask ourselves if this is the trap of the trap. And as I said, the Crypto Insight community, especially the veterans, know exactly what we're talking about. But before continuing down that path, we need to assess the volume profile of this entire range. I've drawn a rectangle here that delineates the value area high at the top and the value area low at the bottom. In short, this is the value area. You already know what the price does when it gets expelled outside. It tends to return. But it gets expelled outside, tends to return, and so on continuously. This is due to auction theory and the need for large institutions to consume time to continue accumulating and distributing their positions to make the move they have been orchestrating. That said, now it's time to ask if the price is ready to return to the value area. From experience, I can tell you that in a hypothetical scenario where the price is capable of returning, my friend, that would imply that this macro Z has come to make the trap of the Z, and this would gain a momentum that would be hard to stop. Now, I'm not telling you this will happen with absolute certainty. I'm explaining based on auction theory what we can expect if we end up seeing a specific event. But let's delve a bit deeper. Let's go to the 1 hour time frame and look at the massive drop that scared many. Of course, during the drop, we are witnessing really anomalous transaction volume. This is clearly promoted by feud. Not only by feud, but also by volatility. When things are aggressive and fast, people get scared and say, hey, I have to do something. I can't stay still. I don't know what the heck I'm gonna do. I don't care. I'll buy or sell, but I'll do something. And this is reflected in the volume. And this is when the big institutions, the smart money, take advantage of such coveted liquidity to start working and orchestrating the next move. That's why, after seeing a large aggressive drop like the one we've experienced in crypto, it's an opportune moment to expect a resting phase. We are going to enter a range. In fact, we are already in one. That's why we have defined a click at the price level of $59,310, as we speculate that if the price is going to fool around here, it's very likely that it will react here to continue fooling around. We'll see what for, but it's probable. In short, we also have an impulse followed by a channel here. And that's where we are now. Now, let's cross this Bitcoin analysis with Ethereum and then offer you the final conclusion of the matter. Look at this Ethereum chart on the daily chart. Like Bitcoin, yes, it's been working within a macro bullish channel that gives us little information now. But here we see the same thing. The bearish impulse, the corrective pattern composed of a W, a weak I and a Z, which even a 5-year-old can see has its guideline, its structure. Unlike Bitcoin, here it has indeed broken it and has gone to seek what it needs to seek. In short, this is a distribution and it is heading towards the institutional target. Wow. None of this sounds foreign to you if you watch our content regularly. And here, the most advanced in the class will have already noticed. Their eyes will have gone directly to that level. But notice how, in this accumulation process, where we place the click at the price level of $21.51, the price has now magically reacted to the origin of the breakout. This is a manner of speaking, since the Crypto Insight community well knows that we obsess to significant levels over visits to the origins of the breakout. Therefore, it's no surprise surprised to see that kind of reaction in the price over the structure. Does anyone believe that the price after a big chaos comes here and reacts? Absolutely not. And unlike Bitcoin, Ethereum has allowed us to look for a click that is much simpler and clearer. Here we have it. But hey, what does intuition tell us? It tells us that sooner or later, at some point, that will be breached and that something bigger will be created here. Sincerely, we speculate about a higher time consumption where long-term opportunities will appear. Let's recap. We have the Japanese index, the promoter of all recent financial falls and misfortunes, which has clearly sought a key structure, a defense zone, telling us that, at first glance, this is not the end of the world. Also, what it tells us is that an immediate V-shaped recovery could happen, but it would be somewhat unusual. It also invites us to think, why not? A small time consumption and we'll see how. But ultimately, as long as this is not broken, we do not have to think, in any case, that a stock market crash is coming. It's more prudent to think that we are facing a FUD campaign and that the opportunities in the traditional market are about to materialize. The same can be said for the S&P 500. In fact, we can be accommodating and let it fall more. Why not? Let it look for a replica of this impulse here and let it fail or even look for the trap. This point is the most viable. Let's see, probably for the rest of the year. For the traditional market, this would be spectacular. Just like the defense zone, why not? But we are not saying this will definitely happen. Rather, as long as this is not breached, we must remain positive. And of course, there may be some kind of visit or some kind of structure that then gets broken through and we continue on the upward path. Notice with the Nasdaq that we have already reached the defense zone. If it decides to, why not scare us? As I said, a buyable trap in the Nasdaq. Very buyable. And we'll see. But as I mentioned, after a big drop, there can be a moment of disorientation followed by an inertia-driven attempt to drop, which turns out to be a failed trap, an optimal point to look for entries and then move on. Here, I haven't yet opened the MicroStrategy chart. In previous videos, we explained why we find it very interesting and prudent to keep an eye on MicroStrategy, a fund that buys Bitcoin like maniacs. We see that the Z of MicroStrategy and its defense zone, after the big scare, has been recovered with great solvency, and this has not been breached. Therefore, let's not assume that the world has ended. I hope the message of this video is clear. To conclude on Bitcoin, we're saying that if this was a trap, which we announced was the optimal point to look for that buy, we have likely experienced the trap of the trap, something we at Crypto Insight love, and the chance, the possibility, remains open. We don't yet know if it will happen, but we are studying the recovery or not of the value area. If this recovers with the precedent of having the trap of a trap, friends, buckle up and get on the rocket because this will take off. However, if we see that the price is unable to enter here, doesn't enter, then we need to evaluate what the smart money might be plotting next. More than offering you a price projection in this video, it's a video where we have shared price structures, talked about the feud of the Nikkei and shared what we can expect and why, based on how the price reacts to very specific structures. In upcoming videos, if you wish, we will go into much more detail. And of course, in the Crypto Insight live streams, we will be looking for specific buy-sell opportunities for the futures market in intraday trading. If you liked this technical analysis, let me know in the comments. Also, give the video a like, subscribe to the channel, and click on the bell so YouTube will notify you of future posts. And of course, share this video with your friends and other trading and cryptocurrency communities. Good luck in all this trading and technical analysis madness, and see you in the next video. See you later.